Hey everybody, welcome to Trading Capital. It's May 16th. Jumping into the charts here on this Monday, we will start off analyzing the S&P 500, then we'll touch base on natural gas. We'll also touch base on how important the relative strength in gold is and what it really means, as well as the US 10-year Treasury yield. And we'll touch base on the US dollar and kind of tie in everything together. So jumping into the S&P 500 here, it was a very choppy day. You can see here was our Friday close, gap down lower this morning, pre-market trading, rallied all the way back up, made a new, took out the previous closing high, dropped, rallied, dropped, rallied again. But notice how you started making a series of higher lows going forward on the trend. So that is technically a bullish short-term signal. And then obviously again you dropped and you rallied up, made a new high, which is pretty important considering that it's the brand new week, Monday, and you did make a new high in the week to start off the week. And now you didn't hold that high, which is okay at this point in time because you still managed to hold these lower lows for now. So the big trend line that we're watching at the moment is going to be this orange upsloping trend line. As long as you stay above that, you are trading inside of this wedge pattern that will eventually, you were trading inside this wedge pattern where you broke up, went back for your retest, broke up, made a new high, and then you could not hold it throughout the rest of the day. Some selling pressure is commenced. Now the question is, are we going to break out of this wedge pattern to the downside? You will have some minor support. Since you are consolidating above here, I would have to go directly to your double bottom area for your next support. If you break that, it stands to suggest that you go and test this gap fill here. Actually, I think it's a little lower on the charts on the daily basis. So it's around the 392, 393 area for the gap fill. It does favor that you eventually fill that gap. It's just when and in what point in time. But the interesting thing is that you have broken out of this channel, and it does suggest that you originally should retrace back to where you broke out of. If you fail if you fail the breakout, in this case it does look like a failed breakout, you should at least touch the bottom of this channel. So we could see a little bit of selling moving into this key support line here tomorrow, but ultimately I am favoring still that breakout to this potential gap fill up here. I would like for that gap to be satisfied, and on a technical basis it certainly dictates the probability. I'm just going to remove some of these trend lines now so that it's easier to analyze on a daily basis. If you look on a daily basis, we are still very, very low on the charts and compared to what we have recently moved. This massive sell-off at the top of our range all the way down, piercing our range to the low, and now you've had your bounce. There's still that daily gap here on the charts, which inevitably will be filled at some point. But the fact that you have this gap coinciding with this resistance point, it just makes me think that price action has to go up there at the very minimum. At the very, very minimum. And ultimately, will this double bottom hold? There's a strong potential that if we come back down, that this double bottom could hold for a short period of time into the lighter summer volume period. Now we'll just have to monitor that on an intraday and daily basis, but there is that potentiality. If we look at natural gas again having an update today showing strength. A 5 or 8% day at the high. It did manage to pull back. It filled this gap on a daily basis, which we'll put in a trend line here just so we can see. So we have that orange trend line, but then when we flip to the intraday basis, you completely miss that gap fill. So notice how on an intraday basis, the gap is actually down here. So this makes me think that you still have to come down here. One of the key reasons why I'm still suspect of natural gas's price action is not only is it options X heading into Friday at the close of this week, you also have on Friday basically the European Energy Commission has to, or ENI has to settle all of the transactions with Gazprom, the Russian bank and supplier of natural gas and oil. So Friday's a big day. It's options X. It also means that large forms of money will be paid in euros and then settled in rubles. But ultimately, it does mean that the European leaders are now watering down their sanctions when it comes to Russia and how serious Europe really needs Russia's energy at this point in time. It's not a matter of just turning off the switch and ultimately you can negate that person's supply of energy to your continent or countries. And that's what they're realizing. They have now taken responsibility and said it's too much of an economic toll. We have the Europe's latest GDP forecasts and they are disgusting. They revise them down and they're on a path that if they tried limiting the use of Russian energy, their people would be ultimately paying the bigger toll. And that's what we've been saying for the last few months. And it's obviously politicians are a lot slower to recognize that, but it's very, very easy to see it from a macro standpoint that the people have been getting hurt, not only in Europe, mostly in Europe, but in terms of an economic hurt, but also here in North America. We've seen record high prices here in gas and fuel as well. So natural gas, it still is putting in that potential right shoulder. It's still too soon to determine whether this is the topping formation or not. I still think you have a lot of fundamentals that suggest natural gas has to go down in the short term, just due to the fact that it's so extended. We are in a tightening cycle. Economic forecasts are declining all over the place in Europe, in China, in North America, pretty much everywhere in the world. And that's what a tightening cycle does, is it brings the asset values down in price. And it's very rare to find an asset that doesn't crash. And typically energies, when the recession or the economy is crashing or faltering, energies start to falter at a significant and faster pace. We could see plenty of action on Friday as there is that big European contract that's supposed to settle for Russian natural gas, and they certainly need help over there in Europe with their energy policy and security. And I'm afraid I've been saying that there's no way that they're going to be able to phase out the Russian gas with turning off the switch. But analyzing this chart pattern and using this previous topping formation as a guide, it does dictate that natural gas could potentially, notice how here you had the channels that you were trading in. So basically the neckline's down here, you had your breakdown, but the right shoulder ended up coming quite a bit higher than the left shoulder. So if we look at how much higher that came a whole extra 10% higher. Now, I'm not saying we're going to move an extra 10% higher from this point in price, but it does suggest that there is a potential that we can come a little bit higher to take out this left shoulder, just as we did on this pattern. And the interesting thing is that if we carry this same resistance line forward and connect it to the left shoulder pivot high, it shows you that this could be your next potential resistance point as you come up into this previous trend line of resistance that pivots on this left shoulder, this right shoulder, through the head, and this left shoulder. So we'll just have to monitor it, be patient with it. I do think since now Europe is going to be buying natural gas and watering down their sanctions, it does favor that certain energy prices will come down in price, since the supply in terms of how much energy Europe needs will come down as Russian gas is now imported. So it was kind of this 3-month waiting period when the war started, who's going to break first. And I think it's clear that Europe is breaking based off of how strong the ruble is and the fact that it's making new 4-year highs against the dollar, and how revised down the Europe forward guidances in terms of their economic and GDP growth. It's just very abysmal. And they are clearly cracking under the pressure of Russian sanctions, as opposed to Russia cracking down over the European sanctions. So we'll just have to monitor and see how it shapes up. If we flip over to the US 10-year yield, actually we'll take a look at gold before we do the US 10-year. So let's take a look at gold. Gold, I think, is putting in this potential. You can see that we've been a buyer off this trend line, and you can notice how you've had a beautiful bottoming tail reversal right off of this area of support. I do think gold can eventually go a little bit lower, but it's very, very impressive that gold is still positive on the year relative when you compare the NASDAQ or the S&P or any of the other major sectors and indices. Gold is still holding ground compared to a lot of the high-flying sectors that were outperforming. Now, gold is a little bit oversold in the short term. It has had a tremendous sell, and look at this methodical selling that takes place. Just this tight range of selling all the way down that's clearly driven by the manipulation of the futures market, being able to dump basically unlimited amounts of gold, and same thing, buying unlimited amounts of gold at any point in time. But clearly we're into support. You did pierce that 1800, which is that psychological number. It makes sense you have this massive rip, and it's just impressive that you closed above this trend line that we were watching. That's really, really key. I still think you could potentially come up to basically test this 1868 area or the end of this arc, but I think the 1868, 1869 will be a big area of resistance. And then I do think we could potentially roll over again in the precious metals before ultimately making a higher move into the year end. And one of the impressive things about the gold is the fact that when we compare it to the US dollar has been on a tear, and you know we're shorting the US dollar via the UUP. I'll pull up the UUP chart afterwards. But when you look at basically the US dollar, we have rallied up significantly into and broken out of the 2016 highs. Now, you have not confirmed above this previous 2016 high on a weekly basis, so this could be a failed breakout, which could send you into a period of consolidation that is likely to take you much lower in the sense of where the US dollar should be trading. So typically when the US dollar is rallying, you see gold sell off. They have a strong correlation in the way each price inversely moves of each other. And since the US dollar has been rallying, gold has sold off, but it hasn't sold off to the extremes in the move that the US dollar has seen. And in terms of previous cycles, when the US dollar rallies significantly, you typically see a sharper sell-off in gold. So if we get some sort of a pullback in the US dollar, and then best case scenario for gold, if and when, it's not a matter of if, it's a matter of when the US dollar starts breaking down, that's when you will ultimately see the big move in gold. So as we see the US dollar start to fall, and I think you have a big area of support here at the 100 level, as we start to see it fall, you'll inevitably start to see gold rally up in the opposite direction, breaking out, and I definitely think breaking past these highs. And when you approach a triple top scenarios, triple tops are very weak in nature. Typically there is, when you approach that triple top with a right pattern formation, it's typically a very weak area of resistance, and I wouldn't recommend shorting gold if we have a nice beautiful pattern that gives us a bullish bias to break through that resistance level. So when we flip to the daily basis on the US 10-year, you can notice that we've pulled off the highs. We had 4 days of selling. Now it looks like you're putting in this bear flag consolidation right on the 25-day moving average. So we have closed below today. It'll be interesting to see tomorrow if we close below. I do think you'll have some support at the low range of this channel. Ultimately, I do think you head back to the 2.5 area. And the reason I say that is that's because that's your original area that you broke out of. So this is your breakout area. You had your initial test, your consolidation, and then your push through to move up. So that's going to be your big area of support because that was your big area of resistance before in the pattern. And when you look at the longer term picture, this blue trend line is what's kept you in check for basically 50 years. So that's going to be your massive area of support that I do think interest rates can retrace to, which will ultimately and should give the market some reprieve, specifically tech should be able to mount some sort of a bounce. And as interest rates fall, and that's why we're seeing the US dollar fall, As interest rates fall, the US dollar will also fall, which means that less tightening is happening. There's less people running to the US dollar as a sign of safety. And right, because they have been reckless in terms of their monetary policy over the last several years. And now this is the real first time that they've been serious on clamping down and tightening policy. And now people are running to it because their economy is still the greatest economy in the world, and they technically have a better shot at repaying their debts should things go awry. But nonetheless, with a falling U.S. 10-year yield, ultimately that will cause the U.S. dollar to fall, which should give gold a little bit of a fire underneath it, and it should also lift potentially the risk stocks, up a little bit, as they are. A lot of them are oversold. Now, there are names like big cap names that still will go a lot lower and can go a lot lower versus some of the beaten down small and medium caps. I do think some of those small to mid caps still go low on the charts, but for now they've put in some pretty definitive lows during this period of the cycle. So I hope this analysis helps. That's why we took off a lot of our long positions on Friday. We wanted to bank a lot of the winners, put them in our pockets. We are still long a variety of names, so we're going to have to monitor them over the next week or two. Options X is approaching on the end of the week, as well as tomorrow. I believe we have Federal Reserve Chairman Jerome Powell speaking. It's not a Fed meeting or an FOMC meeting. He's just speaking, but it could potentially be a market mover, just depending on what type of language he uses and rhetoric, in the sense whether he's more dovish or hawkish. So we will be paying attention to that. I think it's in the afternoon tomorrow. One other thing we'll touch on is Bitcoin. I know Bitcoin's been under pressure lately. It's been under significant amounts of pressure. If we look at Bitcoin, let me just erase that. Sorry about that. Bitcoin has formed this little bit of a bottoming tail. You are starting to put in potentially this bullish consolidation. I do think you have to move up to this 35,000 mark and recapture the gap. Then you look to this parallel channel. I don't think there's much more upside past the 38,000 level. That's going to be really stretching the move. Of course, if the Fed pivots and starts to become less hawkish on the economic policy, since we are getting forecasts around the world that economies are faltering and there's headwinds, all over the place, then obviously Bitcoin can rally with a more dovish Fed. But at this point in time, with them remaining on track in the sense of their tightening fiscal policy, things should still go lower. And we will certainly be abreast of that change and inform our members. Once that economic policy switch happens, we will be ready for it. And again, it will be one of the greatest rallies that ensues, just like we always go through these boom and bust scenarios since the Fed has unleashed their dual mandate of controlling inflation and monitoring the unemployment rate. I hope these videos help. Stay tuned for more trade alerts. If we get a rally, we will be looking to close some more of those longs. So stay tuned.